Why buy now, pay later EMIs and loans are more dangerous than they look. Have you ever bought something you couldn't really afford and somehow convinced yourself it was okay because the monthly payment looked small? Maybe it was a new phone, maybe a gaming laptop, maybe furniture, a vacation, or even clothes. The price tag said $1,000, but the website showed something much more tempting, only $42 per month. And suddenly, that expensive purchase didn't feel expensive anymore. It felt affordable, harmless, almost responsible. But what if I told you that this simple change in how a price is presented is one of the most powerful psychological tricks affecting your money today? And for millions of people, it's quietly destroying their ability to build wealth. Let's talk about why buy now, pay later, EMIs, and easy loans are much more dangerous than they appear. Because the real cost isn't what you think. It's not the interest. It's not the fees. It's something far deeper. Imagine two friends. Alex walks into a store and sees a smartphone for $1,200. He looks at his bank account and decides he can't afford it, so he leaves. Simple. Now meet Ben. Ben sees the exact same phone, but next to the price is a magical little button. Buy now, pay only $50 per month. Suddenly, the phone feels affordable. Ben buys it immediately. Both people saw the same product, both saw the same price, yet one bought it and one didn't. Why? Because human brains don't naturally think in total cost. We think in manageable chunks, and companies know this. That's why they don't want you focusing on the full price. They want you focusing on the monthly payment. The moment your attention shifts from $1,200 to $50 per month, your brain starts making a completely different decision. This is called payment framing, and it's incredibly powerful. Think about it this way. Imagine someone offers you a pizza for $100. Most people would say no. Now imagine they say it's just 27 cents per day. Suddenly, it sounds cheap. The pizza didn't get cheaper, only your perception changed. That's exactly what happens with EMIs and buy now, pay later plans.
The product stays expensive, but your brain stops feeling the pain of the full purchase, and that's where the trouble begins. You see, spending money normally creates a small amount of psychological discomfort. That discomfort acts like a natural brake. It makes us pause and think, do I really need this? But financing removes much of that discomfort. The pain is delayed, and delayed pain feels smaller. This is why people often spend more when using credit cards than cash, and buy now, pay later takes that effect even further. You get the reward today, the payment comes later. Your brain loves that deal because human beings are naturally wired to prioritize immediate pleasure over future financial stability. Psychologists call this present bias. We value today's happiness much more than tomorrow's financial stability. That's why saving is hard and borrowing feels easy. Now here's where things get really dangerous. One EMI rarely ruins anyone. The problem is accumulation. Imagine you have a phone EMI, a laptop EMI, a furniture EMI, a car loan, a credit card payment, a buy now, pay later installment. Individually, each payment seems small, maybe $30 here, $50 there, $100 somewhere else. Nothing looks alarming, but together, they quietly consume a huge portion of your monthly income. This creates what many people don't realize is a financial trap. Your future income becomes pre-spent. Before your paycheck even arrives, part of it already belongs to someone else. Think about that. You're working this month to pay for decisions you made 6 months ago, and next month you'll be paying for decisions you're making today. Eventually, it starts feeling like you're running on a treadmill. You're moving, you're working, but you're not getting ahead. This is where wealth building becomes difficult, because wealth isn't built from income alone. It's built from available cash flow. Let's compare two people. Sarah earns $4,000 per month. She has almost no debt payments. David also earns $4,000 per month, but he has multiple EMIs and loan payments totaling $1,200 every month. On paper, they earn the same amount. In reality, Sarah has far more financial freedom. She can invest, save.
Start a business. Build an emergency fund. David's money is already committed. His future choices are limited. And that's the hidden cost of debt. It doesn't just take money, it takes options. The wealthy understand something that most people miss. Every dollar can either buy a lifestyle today or buy freedom tomorrow. And freedom comes from owning your future income, not selling it in advance. Now, this doesn't mean all loans are bad. That's an important distinction. A loan that helps you buy a productive asset can make sense. For example, education that increases earning power, a business investment that generates income, or a carefully planned mortgage in the right circumstances. The problem isn't borrowing itself. The problem is borrowing for consumption, borrowing to buy things that lose value while the debt remains. A phone becomes old, a vacation ends, fashion trends change, but the payments continue. You're paying tomorrow for something that stopped making you happy weeks ago. That's a terrible trade. So what's the solution? The next time you see only $39 per month, don't ask yourself whether you can afford the monthly payment. Ask yourself a different question. If I had to pay the full amount today, would I still buy this? That single question cuts through the psychological illusion. It forces you to focus on the real cost, not the marketed cost. Another useful rule is simple. Delay the purchase. Wait 48 hours. If you still want it after the excitement fades, then reconsider. Many impulse purchases disappear once emotions cool down. And finally, remember this. Every EMI represents a promise from your future self. Before making that promise, make sure your future self will thank you for it. Because buy now, pay later sounds convenient. EMIs sound affordable. Loans sound manageable. But the real danger isn't in the payment. It's in how they change the way you think. The moment you stop seeing prices and start seeing monthly payments, you become vulnerable to spending money you wouldn't have otherwise. And that's exactly why so many people feel stuck financially, despite earning more than ever before. The path to wealth isn't about making every purchase possible. It's about protecting your future income. Because financial freedom begins the moment your money starts working for you, instead of you spending years working for things you already bought.